And welcome to the second probate summer school session. Today we're going to be talking about Show Me the Money. Our course number, you probably will want to write this down, is 174090339. And I apologize, I should have done this first. I am Shannon Guthrie. I am the current chair of the Dallas Bar Association Probate Trust and Estate Planning section, and welcoming all of you today for this session of the Probate Summer School. We will be getting, if you attend this entire session, you will be able to get an hour and a half of CLE credit. If we extend to our full 2 o'clock, which is our outside time frame, then you will be eligible for up to 2 hours of continuing education credit. Keep in mind a few things as we are going through this today, that if you look down at the bottom of your screen and hover over with your mouse, you should see a couple of different icons. One is a Q&A, and we encourage you to put any questions that you have for the panelists or the speakers in there, and they will, we have different people who will be answering those questions and addressing those. For other matters, such as even looking back for the course number, you should look in the chat area. We will also be posting other information on that. We are going to have a few, if you didn't attend last time, you'll see this, but it's kind of fun. We're going to have some prizes, so a little bit of a game, and with a door prize and question that you'll want to participate in that. And the way that you respond is to answer in the chat area. So, and the first person that answers correctly will be the winner. You will need to, if you're the winner, you will need to give us your name and your email so that we can send you your prize. So I believe I've covered everything that we have to. We have some great speakers lined up today, and all of their bios will be available to you to look at, but we don't want to spend too much time trying to go through and identify everyone, but you will know a few of them and you will recognize their names and faces. But to segue, this one you may not know as well unless you've been all the way down to San Antonio to appear in court. We have with us today Judge Veronica Vasquez, and she is with the Bexar County Probate Court number 2 in San Antonio. So welcome, Judge Vasquez, and we'll start with you. You may be muted. Let's make sure that, yes.
Shannon, I think Judge Vasquez may want to segue real quick to Jack Wilburn real quick.
Okay, great. We apologize for that little technical difficulty. So we're going to jump forward then just briefly and ask Jack Wilburn if he will go ahead and jump into his presentation of the administration roadmap. So Jack, if you'll take it from here, then we'll wait for Judge Vasquez and bring her in after you.
Good morning, or afternoon, I'm sorry. Good afternoon. My name is Jack Wilburn, and I've been asked to give a dependent administration overview. And I'll say this, I would have killed for something like this, and I bet Nathan Griffin would have as well, because the way I learned how to do this was calling Nathan Griffin a million times and asking him every question you could imagine. So I'm glad that Judge Warren is doing this for everybody so we can learn how to do this. The first thing I'll say is, from my perspective, and I think a lot of the panelists' perspective, is the first thing you should do is make sure you've done everything in your power to avoid a dependent administration, because it is expensive, it's time consuming, it is just more difficult and more expensive than an independent. So if you've got a way to appoint an independent administrator via agreement, family settlement agreement, anything like that, use that. And one of the big reasons is sometimes you can avoid the bond. But if you're just stuck and there's no way to avoid a dependent administration, The first thing you want to do, and just so we all know what we're talking about today, everything we're talking about today is from the perspective of you as an attorney representing a civilian dependent administrator. So the first thing I do is make sure that my client can get pre-qualified for her bond. And the way you figure out how much you need to bond for, let's just use a simple example that decedent's estate has a house worth $250,000 and there are bank accounts worth $100,000 and cars worth $20,000. You do not bond for what I call the dirt. You don't bond for the house. You would only bond or seek a bond amount for the cash, the bank accounts, and the cars. So in that example, your bond would be $120,000. And whatever bond company you choose to use, you can pre-qualify them, and they'll be able to tell you, okay, your person's qualified up to or approved up to X amount of dollars, and then you can kind of figure out if you're good to go there. So I don't even show up to court unless I know that my client is pre-qualified. So then you go to your hearing, and if by the grace of God, the judge signs your order and appoints your dependent administrator, that starts a clock running that gives you 20 days to file the oath of the dependent administrator and that bond. So essentially what you do is send that order over to the bond company, and they'll send the bond. You take that down with an order and get it approved, get the bond approved, and then you can have the court issue letters. Normally it'll be letters of administration, but in rare instances, I'd say it's much more often to just be a vanilla dependent administrator. But every once in a while, I serve as something called a dependent administrator with will annexed. And that is where you're the administrator, but there's a will attached to it. So you always want to make sure that you understand that distinction and know what capacity you're serving in. And if there is a will, well, regardless, you want to make sure everybody in this situation understands through your client that you are not the lawyer for the heirs and or the devisees. You're the lawyer for the dependent administrator. And generally you send out a letter that sort of explains that. If there is a will under section 308.002, you'll need to send a notice to those devisees under the will within 60 days. There's a lot of time clocks running on your client as soon as she's appointed as a dependent administrator. That's one of them. The other thing you'd want to do is, I do this online. I go to irs.gov. I search for online SS4 form, and I obtain an EIN. And an EIN stands for employer identification number, but it's what we use for the estate. You're going to need it to open a bank account. The next thing you're going to want to do is issue notice to creditors. You're going to publish notice within 1 month of the qualification date. In Dallas County, we do that with a daily commercial record. You do it online. It's pretty simple and streamlined. If there are secured creditors, if you have a mortgage, if you have a note on a car, you're going to, within 2 months of qualification, you're going to need to send out actual notice to those secured creditors. And you can also send out what we call permissive notice to unsecured creditors. And I would do that as soon as possible because it starts a time clock running. Nathan Griffin's going to give a really great talk about that later, but the permissive notices are very important in a dependent administration. This is what, the next thing I wanted to talk about is what I call the mother may I part of a dependent administration. You all remember that game we used to play when we were kids. You couldn't do anything without asking mother may I. That's a dependent administration. You can't wipe your nose without asking the judge if it's okay, except for you can pay taxes, you can pay insurance, and you can pay your bond premium without asking for court permission. But other than that, you better have a motion and order on file, or you better have some sort of broad order at the beginning of your administration that lays out what you can do without any further court involvement. Then the next thing your client does is marshal assets. What do we have? Do we have bank accounts? Go to the bank and get those. Do we have cars? We need to secure them. Do we have personal property? We need to secure that. Do we have a house? We might need to change the locks. So just make sure you're gathering up assets. The next thing, within 90 days of the date of qualification, you're going to need to file an inventory, and you're going to need to amend it as necessary. And I point that out because lots of times you think you understand what's in the estate, and especially when there is a surviving spouse and kids from a prior marriage, lots of times there's disputes about whether or not something is community property or separate property. And I know I've had to amend inventories before because I've learned later that no, in fact, it wasn't community, it was separate, and here's why. You'll need to handle claims. Nathan will talk about that, but you've got 30 days to accept or reject a claim that comes in. You want to pay property taxes. As you know, those are due before January 31st. And you'll want to file federal tax returns. You'll want to file a 1040 for the year of death of the decedent by April 15th of the following year. And you'll want to file a 1041, that's an estate tax return, by the 15th day of the 4th month after the close of the fiscal year. I use a CPA. I'm not a CPA, so whenever I take on a new estate or have a client that does, I send them to my CPA and say, here, let's make sure we cover these things. And you want to make sure that the real and personal property is insured if there's cash available. If you don't have any cash, you don't have any obligation as a fiduciary to reach into your pocket, but you might want to let the heirs or devisees know that there is property that needs to be insured, and they may want to take steps to insure that property. And they're entitled to reimbursement for that estate expense. But for sure, you want to make sure that property is insured so it doesn't get lost. One of the things that comes up a lot is determining heirs. Whether or not it was done prior to the appointment of the dependent administrator is a question you'll need to answer. And if they haven't been determined, you and your client will need to move forward and file an application for determination of heirship, because when you get to the end, you don't know who gets the stuff if the judge hasn't determined who the heirs are. If your administration is going to last for more than a year, you're going to need to file annual accountings. And that first accounting is due 14 months from the date of qualification, and then it's going to be due annually thereafter. And hopefully, sooner rather than later, you'll be ready to file a final account. And again, you'll need to have determined who the heirs are, or you'll need to have a will annexed that tells the judge who to authorize you to give the assets to. And then give the heirs their stuff. They've been waiting on it. They've probably called you 100 times during the administration. And so it'll be time to distribute the assets. And then you'll file a closing affidavit. And then from my perspective, the most important thing that needs to happen is get your bond released. So your closing affidavit will result in an order that releases your client as the fiduciary and releases the bond. You'll send that to the bond company and get that bond canceled. And I know I've been talking very fast. I was given 7 minutes. In true lawyer fashion, I'm at 10.5 minutes. But if you have questions, you can email me anytime, jack@jackwilburn.com. And I am not 100% sure if we're going to Jeff Wolf to talk about estate accountings, or if we're going to go back to Judge Vasquez. So I'll leave that to somebody smarter than me to make that determination.
So I believe Judge Vasquez is back on and just somehow disconnected, but Judge Vasquez, can you hear, and are we good to go?
Yes, I'm here and we're good to go. I apologize. My computer just shut off all of a sudden. Of course, the most important time. My name is Judge Veronica Vasquez. I am from Bexar County, the beautiful city of San Antonio, Texas. So hopefully after this whole COVID mess is over, we'll see some of y'all visiting our beautiful city soon. I was asked to talk about kind of the 5 most important things that we see as far as administrations are concerned. I sat down with my auditor, and of course we had more than 5, but I can do it within 5 minutes, I promise. I've already practiced. So I'm just going to talk a little bit. You know, there's different types of administrations. There's independent, dependent, temporary, and small estates. So a tip for independent administrations. So we tried to think of, you probably know the basics, but something that we see as far as what we think is a good tip of practice would be the oath must be clear as to whether it's an independent executor or independent administrator. They're not interchangeable. So just remember, you follow the exact language on the oath that is on the order appointing the personal representative. The other thing is when filing an inventory in an independent administration, the inventories are due as the date of death and to the assets only. So as to the date of death of that individual, not as to the date of death, not as to the date as which when you file it, but actually when it's the date of death for the individual. No debt should be included, no liens, mortgages, balances owed on a vehicle. Do not include real property outside the state of Texas. Bank accounts and life insurance policies should be payable to the estate, no PODs or TOD accounts. Description of the bank account should include the name of the bank, the type of the account, checking, savings, money market, etc., and the last 3 or 4 digits of the account only, obviously for privacy reasons. Vehicles should have the year, make, model, and VIN number on them. List of claims should be for claims owed to the estate, not for debts of the estate. An amended inventory is for making corrections to the original inventory, and a supplemental inventory is for adding property not shown on the original inventory. When you close an independent administration, it's generally not required. However, if you decide to close it, you would like to close an independent administration, they can be, but just remember, if there are any other assets that are discovered later on, you need to appoint a successor independent administrator, and then an independent administration must be reopened. Dependent administrations, inventories are filed and must be as the date of death, but there is absolutely never an affidavit in lieu of an inventory that is permitted. Of course, he talked about this earlier, bond is required and must cover all personal property. A dependent administrator does not bond for real property until the real property is actually sold. The tips that we talked about, and he talked about earlier, that you need to file, if it's open for longer than a year, you need to file an annual account within 1 year and 60 days, so basically 14 months. So include in that account reporting dates as to the date of qualification, include changes and or property not previously reported, include all income received and dispersed during the year, include all bank accounts and last bank statements or verification of the funds for the end of the reporting period. Please reconcile the accounting. This is helpful to the auditors. The auditors will review the amount of the bond at the time and make sure the bond is sufficient to protect the assets of the estate. If a bond needs to be increased, the court will file a motion in order increasing the bond. The annual account will not be approved until the bond writer is filed and approved by the judge. So also, just when the final account has to be posted, the court needs proof that the copy of the final account was provided by either certified mail, return receipt, or electronic delivery to the heirs. Waivers are also acceptable. The final account allows the dependent administrator to distribute assets to the heirs or beneficiaries once approved by the judge. Another tip would be attach the receipt and release from the heirs or the beneficiaries with the application to close. As far as temporary administration is concerned, the tip that we have there is you do not need to file an account on temporary, and it does not need, a final account on the temporary does not need to be posted. You do need to file a final account, but it doesn't need to be posted. As far as small estates affidavits, those are pretty basic. Just go to the Texas Estates Code and follow it verbatim. I know that on my website and on the Travis County website, we also have examples. We like them to use. We ask our practitioners and the public to use the forms that we provide. If they're on any other form, we reject it because it's easy to use on that form, and we have instructions. And on the Bexar County website, we're one of the only counties that have English and Spanish instructions for all of, so if you have a Texas Guide for Independent Administrator, Dependent Administrator, or the Small Estates Affidavit, all of those instructions are posted in English and in Spanish on our probate Court 2 website for Bexar County. So if you guys need to explain that to your client, or you need to provide instructions to your client in Spanish, please feel free to go to our website and the Probate Court 2's website and print that out for yourself. So that's it. I'm not going to talk any longer. I think I've had my 5 minutes. And just thank you for allowing me to be here. And it's nice to meet you. And hopefully I'll see some of you practitioners in San Antonio soon.
Thank you very much, Your Honor. Shannon, did you want to talk about the Judge Warren's trivia questions?
Oh, hold on. You'll have to allow me a second to get to that because I thought you were doing it. Hold on. I will have to minimize. You can tap dance for a second.
Oh, well, in that case, real quick, hi. So Judge Warren has a couple of trivia questions. These are local icons around Dallas. And if you recognize where this is from in Dallas, please feel free to put your answers into the chat feature. Shane and I will go through the answers and follow up with the winner to get the email address. But this is the first of 3 trivia questions of local Dallas entities. So with that being said, what we'd like to do again is introduce Jeff Wolf, who is a practitioner as well, to talk a little bit more about the accounting side, a little bit further in details beyond what's already been discussed. Jeff, let me turn it over to you, and if you'll share your screen.
All right. Okay, hopefully everybody can see that well. Good afternoon, everybody. My name is Jeff Wolf. I am with Wolf Law PLLC, and I'm here today to spend some time with you all discussing estate accountings. And I'm going to address estate accountings in both independent administrations and dependent administrations. With respect to independent administrations, unlike in dependent administrations where you have to provide an annual accounting, there is no time clock ticking from when your client gets appointed as an independent administrator in order for them to prepare an accounting. However, under section 404.001 of the Texas Estates Code addresses the requirements for an annual accounting, or excuse me, an accounting in an independent administration. And when you're when your client's an independent administrator or executor, they will have to provide accounting upon demand from a person interested in the estate. And those individuals are heirs, devisees, spouses, a spouse, a creditor, or any other person having a property right to or a claim against an estate. So once those individuals demand an accounting, you're required to provide one to the person demanding it. Now, these individuals cannot demand an accounting early on in the estate administration. Under section 404.001A of the Estates Code, an interested person can only demand an accounting after 15 months have passed after the date that letters have been issued. Now, it's not the date of when your client was appointed to that role. It's tagged from the date that they received their letters. And subsequent demands for accounting cannot be made. They can only be made after a year has passed from the initial accounting. So the State's Code does not require your client to demand an accounting 3 or 4 months after the first accounting has been provided. They have to wait a year before they can demand another accounting. As I mentioned before, section 404.001 of the Estates Code discusses in writing exactly what you have to provide when you're representing a client who's an independent executor or independent administrator of an estate. And you have to provide an exhibit that is in writing and sworn to and subscribed by that independent executor or administrator that identifies the property belonging to the estate that has come into the executor's possession, the disposition of that property, debts that have been paid, debts and expenses still owing, property of the estate still remaining in the executor's possession, other facts to provide a full and definite understanding of the exact condition of the estate, and facts, if any, that show why the administration cannot be closed and the estate distributed. Now, as I mentioned before, 404.001 relates to independent administrations, but as I will discuss in a little bit, Section 359.001 of the Estates Code discusses the contents of an annual accounting in a dependent administration. And those requirements in Section 359.001 are much more detailed. And I will tell everyone that as a matter of practice, if I'm preparing an accounting for a client who's an independent executor or administrator, my accountings in those situations are exactly the same as my accountings that I provide in estates where I'm appointed as a dependent administrator or my client is appointed to that role. They don't differ, and oftentimes, when you're looking to prepare an accounting in an independent, look to 359.001 for more detail as to what needs to go into that accounting. And I do want to mention that in the Dropbox link that has been provided to everyone, you will see a example accounting that I have done in the recent past and in the state. Of course, I've got all the identifiable information redacted, but that's a good, I think it's a good example to use if you've never prepared an accounting before and you want to have kind of an example of what a typical accounting might look like. And that was in a dependent administration, by the way. But again, my accountings in independent administrations and dependent administrations are, they look the same. That's my practice. As far as starting out to prepare the accounting, on the first accounting that you're providing, the inventory balances with respect to what the balance is in a bank account or a brokerage account and values of the estate property, you will use on your accounting what you had on the inventory, because you've already prepared the inventory at the very beginning of the administration of the estate. And so that will just be the first section of your accounting that shows what the assets were and their values as of date of death. Now, obviously, you as an administrator, an independent, or your client as an independent executor, is not responsible to account for what might have happened between date of death and date of qualification to that role. Nevertheless, what I do like to do, because there's obviously going to be a little bit of a time gap between when the individual passed away and when someone qualifies as the estate representative. So what I like to do with respect to bank accounts or brokerage accounts, I like to try to show, if I can, what has happened to those accounts between date of death and date of qualification. Again, you're not responsible for that, or your client is not responsible for that, but it provides a nice link between date of death values and the beginning value on the, when you start talking about beginning assets on hand, in your hand is, or your client's hand is independent executor or independent administrator. When you prepare your first annual accounting or an accounting that's been demanded of you or your client in an independent administration, the ending balance on the last accounting that you did will be the beginning balance on the next accounting. I mean, I think that's pretty obvious, but it is important to show that link so that the interested person or the court in a dependent administration can see, can trace really what has happened to the funds from the funds in the estate from the very beginning, as well as assets of the estate. A couple of things that I would like to stress here with respect to preparing accountings for clients of yours that are independent executors or administrators is you need to let your client know at the very beginning that you are going to need to be provided with all of the bank statements or brokerage statements that show exactly what has happened to the various estate bank accounts or brokerage accounts from the time your client was appointed to that role. And you want to let them know that in anticipation that a person that is interested in the estate might demand an accounting, so that if that accounting demand does come, you're in a position to be able to easily prepare that accounting from the bank statements and the brokerage statements, and your client knows that they've got to be careful with how they spend money out of the estate. And the other thing I like to stress is when that accounting demand does come to your client, do not just rely upon your client to provide you with a spreadsheet or an email that discusses what money has come into a financial account and what money has come out of that financial account during their administration of the estate. That inevitably leads to problems. The client might make mistakes. You want to get that information directly from the horse's mouth. And what I mean by that is you want to see all of the statements, whether they're checking account statements or brokerage account statements. Another thing that I'd like to address, because this is very important in the state administrations, I try to instruct my clients, and when I'm serving in a role as a dependent administrator, I want to make sure that expenses are minimized to the extent that they can. When my client receives an accounting demand in an independent administration, or and more accurately, when I'm considering if I'm representing a person that's interested in the estate who's thinking about demanding an accounting, I will instruct those individuals that are thinking about sending an accounting demand and say, look, will it be acceptable if I get a copy of the inventory from the independent executor or administrator, a copy of all the brokerage statements for the various estate accounts, a copy of the canceled checks, maybe closing statements for sales of real property, and tax returns that have been filed for the decedent in the estate? Do you think that information will be enough for you to understand what's been going on with the estate administration? And sometimes, if I'm representing someone who's thinking about demanding an accounting, they will say, yeah, I think that will be fine. And I will tell them that it may be better to go this route rather than demanding a full statutory accounting, because it's going to save expense. Depending upon the estate, I mean, there can be estates where there have been a lot of transactions that have occurred, and if it's in an independent administration, your client may not have prepared an accounting for several years, and it can be a very, very expensive process to get that accounting prepared. And so you want to, if you're representing someone that is seeking or thinking about seeking a statutory accounting, let them know that and maybe try to go another route before demanding that accounting, because a lot of times they can get all the information they really need from the documents that are listed on this slide, on the slideshow. Again, this kind of reiterates that issue about considering the cost. If I'm representing an independent executor or administrator and they've received an accounting demand, typically that comes from a lawyer. A lot of times I will pick up the phone after receiving that accounting demand and say, look, is there, what information can we provide to you? Is that something, can we get you all the bank statements and canceled checks and tax returns? Will that be enough? And let them know that, look, if that's not enough, that's fine. We'll be happy to prepare the accounting, but it is going to cost money. And all of those attorney's fees and expenses that are incurred in preparing that accounting are going to be properly paid out of the estate. So essentially, if it's an heir of the estate or heir or beneficiary of the estate, they're going to be essentially paying the cost of that accounting. So you want to try to minimize those costs if you can. Now I'd like to specifically discuss estate accountings in dependent administrations. Those, of course, are court-supervised administrations. Those accountings are required by Section 359 of the Estates Code. And as said before, they have to, I think Judge Vasquez mentioned before, they need to be filed within 14 months after qualification. And so when you get appointed as a dependent administrator or client gets appointed in that role, you want to calendar that deadline and with some reminders on it so that you know it's coming. And they have to be filed every year until the estate is closed. And one practice tip on this is with respect to when you or your client are appointed as a dependent administrator, you want to try to take, and you're preparing the accounting, you want to try to take that accounting through the end of the month of the closing date of that accounting period. For example, if your client was appointed on January 2nd of a particular year, I typically try to take the accounting through January 31st of the next year, especially if there's brokerage accounts involved. That just makes it easier to prepare the accounting because the brokerage statements are going to indicate what the beginning and ending balance of that investment account is. It's not going to provide you daily balances and daily values of every single asset that it comprises that brokerage account. So if you can, in order to avoid having to go back and trying to do historical searches about stock prices or mutual fund prices in the middle of the month, which can be extremely time consuming, especially if a brokerage account has many investments, try to also qualify, take that accounting through the end of the last date of the accounting period, last month of the accounting period. And to further those efforts to do that, if you get appointed, you might want to try to qualify on the last day of a particular month if you can. So if you get appointed on the 20th of a month, there's going to be a little bit of lag time to get your bond approved and to get your letters. But if you can, try to file the bond and try to get in the oath and get your letters on the last day of the month. That just makes it even easier to prepare that accounting so that you're doing it on the last day of the month, which will be easier, especially if you've got brokerage statements involved. With respect to estate accountants and dependent administration, Section 359.001 addresses exactly what needs to be in that accounting, in the dependent administration. And again, the example of accounting that's included in the Dropbox link kind of shows how I represent these various items. I'm not going to go through them one by one. You all can look at that statute, and I've just listed out the various items that need to go in that, when you're doing specific items that need to be included in the accounting for a dependent administration. The one thing that I would like to highlight is make sure that when you get to the point of preparing an annual accounting, that to the extent possible, you have filed all tax returns that were due during the accounting period and paid all taxes that were owed for the accounting period. And then you have if you can't do that, you'll need to explain why tax payment is delinquent. And then, of course, you'll also want to make sure and pay your bond premium, make sure that's been paid so you can make that statement in the accounting. One other thing about dependent administrations that the code specifically addresses is you've got to discuss what's happened to various claims. What claims have been allowed, what claims have been rejected and the date of rejection. And if any lawsuit has been filed on those claims, you're going to want to disclose that in your annual accounting. Now, what I also like to do in my annual accountings is if I have used the provisions of 355.064 of the Estates Code and successfully barred certain claims because the creditor on a rejected claim did not file a lawsuit within 90 days of the rejection, I want to mention that in my accounting, because what I like to do in my orders, my final orders closing the estate, is I like to have a provision in there that references those particular claims and has a finding that those claims are barred as a matter of law because a lawsuit was not filed within 90 days of rejection. Now, some courts will sign orders with that language, other courts will not, and you'll just have to check with your particular court to see if that particular judge is willing to include that language in the order on the final accounting. One other practice tip, and this kind of obviously goes with clients of yours that are appointed in either an independent administration or, and specifically in this case, as dependent administrator, make sure they're aware at the very beginning that they're going to have to account for all the money that's coming in and out of the estate, and note that the court may request that as part of an accounting, an annual accounting, that they provide the various bank statements and brokerage statements for the court's review. Make sure they're aware of that, just so they behave properly, I guess is the best way to put it. And also, never deal in cash. Tell your clients if they're a administrator of an estate, don't deal in cash ever. Whenever I'm appointed, I never deal in cash. It's just always better to either have a check written for something that the estate owes, or have a wire transfer notation that shows where money went if money was paid out of the estate. It's just never a good idea to start withdrawing cash out of those accounts. Also, keep in mind with respect to estate accountings and a dependent administration, if you've got accounts on hold at a bank or other bank, like a checking account or a savings account, you're going to need to get a verification from that bank in order to include that with the accounting. Now, you can always supplement that later if you're unable to get that verification by the due date of your accounting, but try to know about that so that, when you know that your accounting's due in 30 or 45 days, you start that process to get a verification of the funds on deposit as of the closing date of the accounting, because some banks take a long time to do that. And it can be incredibly frustrating if you're coming upon a deadline and you don't have those verifications. One other thing with respect to final accountings, there's also a requirement, and this was mentioned before, I believe, by Jack Wilburn, that you have to list the persons that are entitled to receive the estate, so the court knows who to order you to turn those funds over to. And therefore, if a will needs to be probated or an heirship determination needs to be done in that estate, make sure you do that before you file the final account, so you can make that statement in the accounting as to who's supposed to receive the assets of the estate when the estate is closed. And finally, with respect to final accountings, independent administrations, you're going to, if you're appointed in that role, your client's appointed in that role, you are going to need to have citation issued on that final account and sent to each heir or beneficiary by certified mail, return receipt requested. And in addition, you're going to have to send a copy of that final account to the heirs or distributees of the estate by certified mail or fax or email. That is an important thing to remember, because a court will not approve an accounting, either an annual accounting or a final accounting, will not approve a final accounting until that has been done. Now, of course, there is the ability to get waivers of citation from the heirs or beneficiaries, so that you don't have to incur the cost to get the various citations issued and the final account sent to those heirs or beneficiaries. But sometimes, and that's fine to go get those waivers if you have cooperative heirs or beneficiaries. But a lot of times, it can take a long time to get those waivers back, and it may end up costing less time to just go ahead and serve them. So if I've got multiple beneficiaries, I usually just go ahead and serve them with the final account, because I've found in the past trying to track down waivers from certain heirs or beneficiaries can be a time-consuming task. In addition, with respect to final accounts, under 362.005F of the Estates Code, you have to, you or the client, if they're a dependent administrator, needs to file an affidavit of service of that final account, showing who they served, when, by what method, and typically attaching the green cards from them, or if you're able to get waivers, do that as well. If no objections are filed after a citation is issued, the court can audit and settle the final account, and if someone objects, you end up having a hearing on it. Any objections to the final account can be addressed. Now, that concludes my slideshow. I did want to make one other point on accountings, because I see this quite a bit when I'm receiving accountings, when I'm representing an heir beneficiary, or I see other attorneys preparing accountings. When you're dealing with brokerage statements, you cannot just put on the accounting the beginning balance of that brokerage statement and then the ending balance at the end of the accounting period. That does not work. If those brokerage statements have investments, you need to identify the investments specifically. For example, if the estate might have 100 shares of Apple and 100 shares of Netflix, you're going to want to list those specific investments out with the date, with the value as of the beginning date of the accounting and the value as of the end date of the accounting. That gets back to me expressing how important it is to try to qualify at the end of the month. And also if at the end of the accounting there's only $50 shares of each of those assets, there's going to need to be something in that accounting reflecting what happened to those other 50 shares. Were they sold? And there should be a cash entry reflecting the deposit of those sales proceeds into the cash portion of that account. So that's all I had today. I think I probably past my time, but hopefully this was informative. If you have any questions, be happy to shoot me an email. I'll be happy to answer them. And if you've never prepared an accounting before and you're doing your first accounting, don't hesitate to reach out to mentors in the area. I know that several of the panelists that are here today, when I was beginning my practice in this area, I reached out to them and they were extremely helpful. And I think we've got a great section, and I think that most of the attorneys are willing to help if you ask them a question. So don't hesitate to do that. And I hope you'll have a good rest of your day.
Well, thank you so much, Jeff. And for our next trivia question, this is an image related to a location in Dallas. I'll give a tip. It's a residential area. And so if you know where this is, and there's a prior photo was linked to people maybe I saw earlier, please write your questions or your answers in the chat feature. And so what we've talked about so far, again, is you've got the letters now, and at this point you have started collecting these assets. And so as part of our panel, I wanted to identify a couple of our panelists. We also have Kara Featherstone, Glynis Redwine, Jack Wilburn has already spoken before as well, and Linda Weiland. And these are some of the panelists we'll be answering your questions directly on our Q&A. But with regards to my first question, as a new administrator, as a new attorney representing someone who is new to administration, who should I have on my speed dial, Kara?
Yeah, so if you are starting an administration and either your client is serving as administrator or you are serving as an administrator, there are several individuals that I contact immediately to help me get started in the administration process. Jack Wilburn already spoke earlier about the first steps to be identifying assets and securing assets as quickly as possible. So in discussing with your client who is appointed as the administrator, you should be able to identify what types of assets do we have, what are we dealing with? So are we dealing with real property? Are we dealing with personal property? With real property, there are a few individuals that I call as soon as possible. So I think it's most important for the attorney themselves to have relationships with these people because it'll speed up your process. Sometimes with real property, you might need to have a locksmith right away. You might need to go change locks, might need to have a handyman to board up property, to secure windows, to secure doors. I have a realtor that I've worked with for more than 10 years now who helps me in preparing broker's price opinions that are necessary for evaluating fair market values of properties that we're going to be selling. He helps me in marketing properties. He also helps me if we have a point where a client needs to complete an eviction for a piece of real property. As far as personal property assets, I do also have a contact who assists me with selling vehicles. Jack also mentioned in his talk earlier the importance of insuring assets if your estate has money available to do so. So I do have an insurance agent that I use regularly to make sure that all houses that are assets of an estate are insured, as well as any vehicles, any jewelry that you might be dealing with. Another individual that I always call right away would be a CPA. Along the same lines of what Jack mentioned, I am not a CPA. And so I regularly have my clients reach out to a CPA to assist in preparing those 1041 estate tax returns, as well as reaching out to the CPA to provide us with prior year tax returns if we need those as well. And then if you're also in a dependent administration and you're needing assistance with identifying who the heirs of an estate might be, if you're going to have to complete an heirship determination, I have a private investigator as well as a certified genealogist that I regularly use in those cases to help me track down heirs of estate that I know we need to find for a future distribution. And I think along with all of the panelists here today, I can say, if all else fails, one of my most important resources is Nathan Griffin, who I have called numerous times and has pointed me in the right direction, and given referrals of other individuals that he works with as well.
And so, Kara, do you have someone for dumpster as well?
Oh, definitely. So a lot of my practice involves dependent administrations and specifically sales of real properties. And those properties might be in less than perfect condition. They are most often vacant, and they are all over the Metroplex. And so I oftentimes have to do evictions, and that might involve a team of movers who I regularly use to help me move out personal property. Along with that involves a dumpster, a company who can come and haul away all of the trash that we've decided is not valuable to the estate. That's where that locksmith comes into play. And also, you know, the realtor, all of those people working together, it really benefits your client as the administrator if you as the attorney have already worked with these people and they're familiar with the probate process.
Well, thank you, Kara. And again, all of these professionals are individuals that you pretty much have in your speed dial, but Linda, what happens if I don't have enough money to really hire these professionals? How do I get started on an administration that doesn't have a lot of cash flow to begin with? What are some strategies I could use?
How about that?
Yeah.
That's a little bit better. First of all, if there's no cash with which to pay such things as insurance on properties which need to be insured, bond premiums, the expenses of administration, then something's going to have to be sold. So we may have personal property, maybe household contents, automobiles, vehicles that can be sold, a house, real property if there's more than one piece of real property. So we need to file our applications with the court to get permission to sell the properties. We'll file an application for authority to sell personal property and list in that application the items that need to be sold. If they're individual vehicles, we list those. If you're anticipating needing to sell multiple vehicles or all the personal property in an estate, go ahead and list everything that needs to be sold. If we're going to have an estate sale, what I like to do is include in my applications the authority to hire an estate liquidator and to pay a reasonable commission upon sale, so that we're already authorized to get somebody in there to conduct an estate sale. And in the event that the commission may differ, many companies have different commission rates and so forth. And if there's a question as to whether the commission would be approved by the court, then go ahead and have that contract pre-approved by the court so that that commission is approved beforehand. And the same with the sale of real estate. Go ahead and file an application for authority to sell the real estate, include in there the authority to hire a real estate broker or a licensed realtor, and to pay a reasonable commission on sale there as well. And you know, for both of these types of applications, after the sale is conducted, there is a report of sale. You're required to report the sale and the proceeds received with the court and have that sale approved. Typically with real estate, where you're closing through a title company, the title company will require that the contract be approved, that the sale is essentially pre-approved by the court before you can even close, because that title company will want all of the court orders and the decree confirming the sale before that title company will close the sale. So in order to liquidate, I guess a long answer to your question is, in order to generate liquid cash to pay necessary expenses of administration, we need to go through the process of selling property.
But would you ever, at what position would you tell your clients to put money out from their pockets first? In what circumstance would that be appropriate? And how do you account for that if they had to take it out of pocket first?
Well, it may be, depending on the situation. You may have a piece of property, especially if it's in bad condition or subject to vandalism. It might be a good idea to go ahead and pay insurance premiums on that property to protect the dependent administrator from liability if something happens to the property. If it burns to the ground, they could be liable if that property was not insured. They're certainly entitled to be reimbursed from that out of the estate. That might be a situation where it would be worth advancing some funds simply to protect your client from liability or have the client advance the funds. Paying bond premiums is another important aspect. That has to be paid as well. And if too much time goes by from the date of appointment to carrying the bond without the premium being paid, there could be problems there as well. So if we get into a situation, it's all the more reason we need to sell something quickly to generate cash to pay those important expenses. Again, that's all accounted for in the accounting, as Jeff Wolf had discussed previously. Your client would be entitled to reimbursement. Again, that's an application to the court with supporting documentation and receipts requesting reimbursement for their out-of-pocket expenses for the estate administrative expenses. When the estate reimburses the client, then that reimbursement appears on the accounting as part of an estate expense.
And so we'll get to the question of bonds in a second, but one of the things that we're always concerned about is taxes. So Glindis, you had talked about some ideas, especially about a specific form that you need to be familiar with in order to get your taxes. Would you be able to tell us a little bit more about that, Glindis?
One of the things that we talked about yesterday, we had a quick run through to try and anticipate some of the questions that could come up, and we talked about taxes. One of the things that Jack brought up today was irs.gov. You need to be sure that when you go online that you get on the irs.gov site, because many of if you just put in taxes and you're looking to get the taxpayer identification number for the estate, there are other websites that will pop up that allow you to get the tax ID number online that require you to pay. IRS.gov has all of the information that an executor or an administrator will need to move forward to get copies of prior tax returns, a transcript of the tax return. A transcript isn't an actual copy, but it provides you with the income and the 1099 information. So what other income they might have had. So there could be wages, there could be interest and retirement amounts that were received. All of that information is included on the transcript. The form that I was talking about yesterday was the Form 56. And Form 56 is a notification of the fiduciary relationship that exists between the dependent administrator and the estate. That form, while the IRS website, I went out there and took a look, it says that you don't need it if you've been to court and you're appointed with letters of administration or letters testamentary. But you really do need that form, and you need to become familiar with that form. And once the estate is closed out, that form is then sent in again to say that the fiduciary relationship has changed. So need to get familiar with it, but the Internal Revenue Service unbelievably has a lot of information on irs.gov that will assist you in administering an estate with regard to taxes. One other thing that always comes up, and it has to do with obtaining the tax identification number. And that is that when you're online and you get the tax identification number, the piece that you're required to print out and you have to take to the bank is confirmation letter. If you mess up getting that confirmation letter online, you have to wait or try to get the Internal Revenue Service to send it to you. That could take weeks, and that causes you not to be able to open up a bank account because you have not just the tax ID number, but the confirmation letter and your letters of administration in order to open up the bank account.
And Glennis, real quick, back on the tax form, what's the best way to get those tax returns? Do you mail it in? Do you fax it in? Do you go to the IRS office?
The best way, well, now everything is online. So the best way to do anything with the Internal Revenue Service is online through the website. If you mail in a request, it goes to a service center in Austin or Memphis or wherever, and it gets to the right group. But right now, many of those people are not there. The best way to do anything with anybody at this point is to do it online.
That is a great suggestion. I'm gonna have to go find more about that. And Jack, we talked a little bit about bonds. Could you kind of remind us why we need to get bonds to begin with as an administrator?
The lawyer answer is because the code requires them. The practical answer is to protect the heirs and the creditors. I'm sure we've all sat across from people in our office and said, man, I hope this person is trustworthy enough to be in charge of this estate. And if they do take the money and run, there's an insurance policy there known as a bond that the successor administrator can, what we call, crash down on. It's called a bond surcharge action, and have the estate reimbursed for that. It also helps with just reimbursing the estate for improper actions by the administrator. Maybe they were removed. A lot of times, a lot of people on this panel, we've all been appointed as a successor administrator because the prior administrator didn't do their job. And that's not the heir's fault. That's not the devisee's fault. So you do a bond surcharge action against the bond company to reimburse the estate for all the attorney's fees you had to expend to get this thing back up and running. So I just think of it as an insurance policy to protect the heirs.
Awesome. And so with that being said, I want to get to the next phase again. So we spend a lot of time figuring out, okay, how do I get money? How do I fund this administration? But as most people imagine, it's not just about getting the money. It's about dealing with the debts that we may have owed while we're alive. So Nathan, I know I've been teasing you a lot on our chat feature because you've been using WordPerfect as a word processing software, but could you tell us a little bit more about creditor claims?
Thanks, happy to do so. Apologize that there is no PowerPoint with this presentation, but there is a paper and forms in the Dropbox. Let's talk about creditor claims for a little while in independent and dependent administrations. As probate lawyers, we almost always recommend to our clients that they should file an independent administration. As Jack said in his presentation, you look at all the reasons not to file a dependent. Claims are filed in both. We know the advantages of independent administration. No court supervision, no bond required. It's usually quicker, cheaper. You make one court appearance. A disadvantage to an independent is that it's not as effective in dealing with creditors and cutting off creditor claims, and we'll address that a little later on. And you don't have the same protection for your fiduciary since you don't have a judge issuing orders. In a dependent administration, and I'll be honest with you, there's a lot of people who've never handled a dependent administration, and some who've certainly never taken an insolvent dependent administration all the way through the process. But we know the advantages of a dependent administration. It's an effective means to eliminate unsecured creditors. You have judicial protection for your administrator. The allowances are approved by the court. Your personal rep is bonded so that the estate is protected. The disadvantages we've talked about. It's court supervised. It's judge may I. It's much more expensive. It takes a lot longer time to close, and a bond may be a problem. And everybody's talked about pre-qualifying your client. Cannot stress that enough. Pre-qualify your client for a bond. Bonding companies look at assets your client has, their credit rating, their employment. It does you no good to ask the court to appoint your client and then find out after an order's been entered that they cannot qualify for a bond. If your estate is insolvent or if you have numerous creditors, the dependent administration is probably going to be the better choice to deal with those issues. As Jack has already mentioned, you filed a notice to the creditors in both independent and dependent in Dallas County. It's filed in the Daily Commercial Record, and a publisher's affidavit is returned to the court. You give secured creditors notice in the independent and dependent cases. You're supposed to give that within 2 months of your appointment or within a reasonable time after you've discovered the debt. And then you're also supposed to file, you do it by certified or registered mail, and then you return a copy of the notice, the return receipt requested, and the affidavit of the PR, and it's all filed with the court. A lot of people never give this notice. Typically, the biggest secured creditor in any estate is the mortgage holder on the house. All right, so you've given the notices required. Now we come down to the permissive notice, which has been mentioned a couple of times. This is section 308-054 of the Estates Code. The permissive notice sets out the shortest statute of limitations that exist in the state of Texas. Both independent and dependent administrators or executors can give this notice. You send notice to unsecured creditors by certified mail, return receipt requested, and in your notice you set out that they're a creditor of the estate, that they have 121 days from the receipt of the notice to file a claim. Claim must comport with the standards of the Estates Code. If it's in an independent, you tell them it has to also be presented in one of the ways set out in the Estates Code. And if they fail to file a claim within 121 days after receipt of the notice, the claim is barred in both independent and dependent administrations. And you might, as a practice tip, a lot of your credit card companies have hired some of these or sold their paper to some of these credit agencies. DCM is one you'll see repeatedly. If you have the information, give the notice both to the credit card company and to the credit agency or the collection agent, pardon me. Now then, if a claim is actually presented within that time period, your personal representative has 30 days to either allow the claim, reject the claim, allow in part, or reject in part. If you reject the claim, and here's where independent and dependent differ. If you reject the claim in an independent administration, the creditor has the full length of the statute of limitations that would relate to that claim to file a lawsuit. In other words, on a credit card, which is a suit on a contract, they'd have 4 years to file a lawsuit. In a dependent administration, pursuant to the Estates Code, they have 90 days to file their lawsuit. And if they fail to do so, their claim is barred. As a practical tip, set up a separate file in your estate for claims. We do a little chart in my office, and it kind of looks like this. First column is the creditor's name. Second column is the date the notice was sent. Third column is the date the notice is received. Fourth column is the date that any claim is received. The fifth column is the date you need to respond to that. And the last column is the date the lawsuit needs to be filed or the bar date, whichever comes first. That way you can track these claims and you don't get caught not doing what you're supposed to do if you receive a claim. All right, how are secured claims presented? Well, first of all, secured claimants must make an election. They can either be treated as matured, secured claimants to be paid in the due course of administration, which means they're going to get the full amount of their claim paid, or they can be classified as, they can elect to be treated as preferred debt and lien holders. And preferred debt and lien holder says the only thing I'm entitled to is the return of my collateral, be it the house, be it the car, whatever that collateral might be. And if they elect to be treated as a preferred debt lien holder, they cannot seek a deficiency if there's a difference in the amount of their debt and the value of the collateral. It's interesting, in an independent administration, the secured claimant must record notice in the county deed records of their election. You'll find that in most insolvent estates, just about every insolvent estate, the secured creditor will elect preferred debt and lien holder status because they know they're never going to get fully paid. The question always arises, what about the car? Automobiles are often repossessed even before an estate is opened, or right after an estate is open, or sometime during the process. Well, I believe the estates code says if they take their collateral back, they have elected to be treated as a preferred debt and lien holder, and that's all they're entitled to. I've gotten letters from finance companies demanding a deficiency. I have written back to them, explaining to them the law in the state of Texas and saying that they don't have any right to a deficiency. Never been sued on a deficiency for an automobile. All right, what about presentment of unsecured claims in an independent administration? They have to be presented to your independent executor in a number of ways, either by certified or registered mail return receipt or by hand delivery with a copy of a receipt. They can be presented in a lawsuit, or they can be presented in a written instrument or pleading in the court where the administration is pending. That's typically going to be a lawsuit of some kind in an independent. Notice too that the claim form in independent and dependent must be exactly the same. In other words, there's a form that has to be filed. The claim form has to set out who the creditor is, the amount of the debt, has to be notarized and signed by an officer of the company, and it must contain the magic words that the claim is just and that all offsets, payments, and known credits have been allowed. In dependent administration, claims are presented either to your dependent administrator or to the probate clerk. If presented to the clerk must give notice to your dependent administrator. If the claims in either independent or dependent are not in the proper form, then you have to determine whether or not it's simply the claim form is either one of form, if the defect is one of form only, or it's a fatal defect. Some courts have held that if the defect is of form only, it may not set the statute of limitations running. I think the better practice is simply to reject the claim. Again, we've said in dependence, once the claim is presented, you have 30 days to allow or reject, allow in part or reject in part. And if you reject it, the creditor's got 90 days to sue you or the claim's barred. I encourage you to send the permissive notice under 308-054 in both cases because it puts the burden on the creditor to timely file a claim that complies with the statutes. Now then, what you're going to see in most cases, the vast majority of claims you're going to get come from credit card companies or from one of these collection agencies that have bought the paper. What I see over and over, I'll use DCM as an example because they're frequent players in this. They finally kind of gotten the form correct. In other words, they set out what the debt is, who it's to, the amount. They swear to it by a proper officer of their company, And they even have the magic words in the form. But what you see then is attached to the form an affidavit that simply says, my name is Nathan Griffin. I'm the records custodian for whatever company. I reviewed the records, and Jack Wilburn owes the sum of $5,412.15. The problem with that is, under the estates code, you cannot, your administrator, or you, if you happen to be the fiduciary, you cannot allow a claim that is barred by limitations. That affidavit does not tell you when any of the charges were made, so you have no idea if those claims are barred, the charges are barred by limitation. So I routinely recommend that your fiduciary reject those claims. As Karen and Jack seem to try to make me really old in this process, I've been doing this for a little while. I've had one lawsuit on a credit card in 42 years. All right, claims in Texas are classified. There's an order of payment and there's a classification of claims. We have 8 classes of claims in Texas. Class 1 claims are claims for funeral expense up to the amount of $15,000 and last illness expense up to the amount of $15,000. The code was amended 2 years ago to make each one of these $15,000 each. Before that, it was a total of $15,000 for both. If either of these exceed their $15,000 limitation, then whatever the excess is becomes a Class 8 claim. Second class claims are administrative claims. These are lawyers' fees, near and dear to all of our hearts. Accounting fees, family allowances. These are the costs of administration. Class 3 claims are secured claims for money. This would be your secured claimants who've elected to be treated as such. Class 4 claims are child support claims reduced to money judgment. Remember, to file one of these claims, you have to first go to, the claimant must first go to the family court to have their child support claim reduced to judgment, and it has to be a present value of that judgment. Because the family code has made child support a continuing obligation of the decedent's estate. The second thing, though, that lawyer must deal with in the family courts is the fact that whatever amount of Social Security they are receiving, their client is receiving on behalf of the child, offsets against the child support obligation. Only after they've reduced it to a money judgment can they come and file a claim in the probate court. Class 5 claims are taxes owed to the state of Texas. Class 6 claims are cost of confinement claims. I've never had a cost of confinement claim. In other words, your decedent was confined in either a state penitentiary or a county jail somewhere, and that entity could then file a claim in a probate case seeking to be reimbursed. Never had one of those. Class 7 claims, repayment of medical assistance payments. These are Medicaid claims. I strongly encourage you, if you receive a Medicaid claim, contact one of the Medicaid experts in town and have them review it for you. Most of us don't know enough about Medicaid and their claims to be able to assess whether that is whether the claim is just and right. And so spend a little extra money, have somebody review it who knows what they're looking at, and then determine what you need to do from there. And then Class 8 claims are those claims, all other claims. Independent executors classify claims. Dependent executors submit these to the court and ask them to classify them. Notice who is not mentioned in our classification system. That's right, your Uncle Sam. The code does not talk about debts to the U.S. government, which typically are taxes, as you're aware. 31 U.S.C. 3713A talks about, in the event the estate is insolvent, then you must pay the government above all other debts except family allowances, administrative expenses, and funeral. There have also been some interesting cases that have come down, one in Indiana, I believe, where they say that the IRS can file a claim in the probate court, but if they do so, they're subject to the claims process and the rulings of the probate court. I don't think you're going to see IRS file many of those claims. And I don't think you're going to get much response if you send them a notice. There's an order of payment, section 355-103, tells us when we need to pay claims. You pay funeral and last illness expenses first. You pay allowances made to spouses and minor children. You pay the expenses of administration and then all other claims in the order of classification. Even if you have filed a memorandum of allowance in a dependent administration, the court has entered an order approving the claim, classifying the claim. I believe you still must ask for authority to pay the claim. Again, you're a dependent administrator and it's Judge May I. What about setting aside exempt assets to keep them out of the reach of creditors? It's the duty of the independent and the dependent administrator to set aside exempt assets. Obviously, the dependent does it through the court. What are exempt assets? It's property not subject to forced sale. You can look at Texas Property Code section 42.002 for a list of those things. In most of our states, the largest single exempt asset is a homestead. Remember, a homestead is still subject to being foreclosed on by a purchase money mortgage holder, by a home equity lien holder, by a reverse mortgage holder, by the taxing authorities, both the U.S. government and local authorities. And the other lien that attaches to a homestead is a mechanics and materials lien. However, outside of that, you cannot force a sale of a homestead, and it can't be partitioned among the heirs if there is a surviving spouse or minor children. Exempt assets set aside to a surviving spouse and minor children are not considered as assets of the estate when determining insolvency. Remember, too, that if there's no exempt property, the code makes allowances for money that you can set aside to a surviving spouse or a minor child. It's a $45,000 set aside for a homestead and a $30,000 set aside for exempt property. I handled a case a number of years ago where the decedent was married, but literally the only thing he owned at the time he died were the clothes on his back and the motorcycle he got killed on. We set aside the full $75,000 to a surviving spouse in that case. I've tried to hit the highlights here of claims. Claims are often a little difficult because there's not a lot of cases. I've always told people that if I was going to speak or write on any area, it might be claims because no one would know if I was completely right or wrong. But hopefully what we've talked about this morning and also the paper and the forms will give you some assistance in this area. Thanks.
Thank you so much, Nathan. Just kind of go through a couple of questions. So typically, when we file a probate action, we start getting these letters from DCM or Midland Funding, for instance. What do you usually recommend doing with those letters before the appointment?
Well, hang on to them. You can respond if you choose to, saying there's no probate case that's been established yet. And if you want to give them information about your filing, that's fine. But typically, I simply tell them that there's no probate that's been opened. And, please check back in 60 days or something.
And what about the telephone calls that you start getting?
Usually, those come a whole lot more after your estate's open, but if it's before, I tell them the same thing. And after I've talked to them maybe once, maybe twice, most of the time, I just advise my administrator, or if they're calling me as the lawyer, just to not respond.
And Cheryl had a quick question about, we've already sent the permissive notice to creditors, and then we're getting telephone calls, which I assume are from new creditors. Do I then have to send another round of permissive notices to unsecured creditors?
Okay, I'm a little confused there. If you've sent the notice already, the permissive notice to the unsecured creditor, you don't have to send another one. If you've got new creditors, yeah, you've got to send the permissive notice. And remember, this is the certified mail notice. It's not posted notice. It's the certified mail notice.
Awesome. Great. Thank you so much. So real quick, let me go ahead and as we begin our next transition, this is another Dallas icon that is found somewhere in Dallas. Name the location where this statute may be found. And so please enter in your answers to our chat function, and Shannon will be able to respond. But while we're doing this, let's talk a little bit more. So we've got the money. We know who we owe the money to. And at the end of the day, the money is intended for the beneficiaries or the distributees of the estate. Again, whether they're called heirs, beneficiaries, distributees, people want their money. And so how do we deal with people? Again, as the attorney representing the administrator, or as the administrator themselves, we don't represent the family members. So how do we handle all of the people wanting to know when they get their money? Linda, could you tell us maybe some ideas of how you would start by dealing with people asking, with their hands out?
Well, I think this might be another advantage of a dependent administration, because you can always throw it back on the judge, because it's not up to the client. It's up to the court. It's when the court determines that the administration is completed after a final accounting has been filed. There's no more necessity for administration. So, I'd instruct the client to, talk to the beneficiaries and let them know that there's a lot remaining to be done, if there is, or if we're close to the end, that we're in the process of filing the final accounting and it has to be approved by the court, and the court has to order distribution to the heirs before anything can happen. That's the best way to deal with those clients that keep wanting information. And it's really, again, it's a great way to say it's not up to us. We're waiting for the court.
Would you ever tell them to go through counsel, meaning that they're represented by their attorneys, to say, don't talk to me directly, talk through counsel? Or?
Oh, absolutely. If they are represented by counsel, I would, unless the counsel gives us permission to talk to them directly, or at least if the counsel gives me as an attorney permission to talk to the clients, that's one thing. But if they are represented by counsel, then it's through their counsel that I can communicate with them. Otherwise, my clients can, talk to the heirs if they're willing to do so.
And actually, I know jumping off a little bit topic, Jack, what about if some of these folks just start becoming hostile and threats of lawsuits are now popping around? What do you do then?
Well, that is a tough one, because remember, we're talking about a universe where we represent a civilian. And I'll say stuff when I'm the administrator because, I'm not afraid, but I don't want to pick a fight for my client. So you have to be very careful. I will say this, Judge Bonnie up in Denton says, if you start getting harassed by people, just set a status conference and drag them in front of the judge. And because the main idea here is every time I touch this file, it's costing somebody money. And so if you've got 10 heirs and one heir is just wearing you out, I've actually been in situations where I've charged those fees against that heir's share, and I've had the court approve it. So that's one way to shut it down. But there are times when you might need to bring in somebody to protect everybody. Most of us on this panel are not what we would call probate litigators. So you might need to go, you might need to call Jim Hartnett and say, hey, come protect me, or somebody like that. And that would be an extreme case. If you're bringing in Jim Hartnett, things are going bad. But, you just remember, this isn't about you. It's about your client, protecting her and serving as the dependent administrator.
And so you talked about things in which financial decisions might be made. And let me kind of bounce off of Kara, her thoughts and ideas. Oftentimes, once we know how much money is out there, we know how we're going to pay all the debts. Everyone has an opinion, as to what happens. And so, Kara, would you mind sharing your thoughts about, when you have various family members kind of coming to you and saying, hey, I want the house sold at 150K, or no, I want the house sold at 120K. How do you deal with all of these conflicting quarterbacking opinions?
Sure, I would say it's certainly a unique case if every heir didn't have their own opinion about how this needed to be handled. If I'm representing a client who is serving as an administrator, certainly in a dependent administration, it's the answer that, Linda mentioned we can all fall back on, a sales price for a particular asset, or when I'm selling it. All of those things require court approval. So if, I'm usually telling my client in those particular situations, we need to have a feel for the heirs of this estate. Is this a situation with the 10 heirs that Jack mentioned and one who's the problem? Or is it a situation where there's 3 or 4 heirs and we've, up till now gotten along really well, and I have a feel for we're on the same page, my client regularly communicates with them. But if it's a situation where we know, and my client and I anticipate there's going to be a challenge coming into something, specifically when trying to sell high dollar assets, real property, exotic vehicles, things like that, I always have my client back up, their proposed sales price for the property with evaluation from a professional in that field. So if I'm trying to sell a piece of real property and I don't anticipate it being very contested, I might be able to just rely upon an informal broker's price opinion prepared by a realtor. But if I'm coming in on an estate my client has that has 15 pieces of real property and it's highly contested as far as what values we're trying to sell them for, that might warrant the extra expense of a certified appraiser to give me an opinion as far as value. If I'm looking at a timing for selling particular assets and trying to advise my client, we want to take into account the market, certainly. In real property situations, you might be trying to hold off a foreclosure. You might be dealing with secured lien holders who haven't been paid for quite some time since the decedent has passed away. And then for other assets, you want to take into account market fluctuation. If you have a lot of stocks, are the stocks doing really well? Is there any real need for why you need to sell that particular asset right now? And risk then causes of action from other heirs saying you didn't get as high of a value as you could have gotten. And then as far as how to divide assets and kind of come to an agreement with heirs and your client, a lot of times I try to have my client at the outset stay in regular communication with the heirs of the estate to provide them, send a letter up front and kind of explain, set the expectation of the timeline for the administration. And if things are contested as we've gone along, a lot of times we can go to mediation, we can sit down and do a family settlement agreement that's going to help all the parties come to an agreement on value for sales of property, timing for sales of property, and then how it's going to get divided. If, Joe on the one hand is really set on getting one particular car, then we might be able to divide that up to where other heirs of the estate are compensated in liquid assets and Joe gets his share of the estate by getting the vehicle that he wants.
And Carrie, you talked on something that I don't think we've ever had a chance to discuss before. And so I'm going to throw this curveball to Glyndis real quick. Mediations, family settlement agreements. I think often these are things that come before you get the order for administration. Are there instances where you've seen or experienced where these are things that come after that order has been entered in?
The order for administration?
Yeah, because
I didn't understand.
Well, so again, in my experience, generally, mediation or these family settlement agreements often come in before the administrator gets appointed. And in a sense, have you seen mediations that come afterwards, or where now we're starting administrations and now we have to go back and start deciding how property gets divided through a mediator or through arbitration or through a family settlement agreement?
Actually, that's when most of mine have happened, is after the dependent administrator is appointed, all of the heirs can't agree on how the property is to be divided. So I think usually, hopefully you have a bunch of attorneys that can speak to each other, and they're good about how we want to divide things, whether we want to just liquidate the entire property. Sometimes we have been to mediation after the fact, and mediation sometimes works, and other times we spend all day in mediations and come out with nothing, and those administrations are still open and the property is wasting.
Do you have any tips about how to approach with the mediations or family settlement agreements in these circumstances?
In most cases, having the opportunity and the ability to talk to the heirs individually and then collectively is helpful, because if you can get the heirs to understand what's at stake if they don't agree, which means that the property is going to be wasted, that there's the possibility of the property taxes not being paid, the property going into foreclosure and you needing to then do what would be considered a fire sale of the real property and not getting the full value, that the cars are sitting there and they're wasting. If the heirs understand how much it's costing them, many times you can get them to come to some type of agreement to get more now as opposed to getting less later, attorney's fees and wasting assets.
Thank you so much. And Linda, you know, we had talked yesterday briefly about this, and you had some thoughts about this question of maximizing sales price. I know we go back to this question is, what do I do with this property, and what's the best way to get either rid of it or to sell it to get the most profits out of that? How do you usually handle these questions for your clients in terms of how should they approach these asset sales?
Well, I think that as a dependent administrator, we have a duty to try to sell the property for the most we can get from it. So when an administrator is appointed, typically we're going to have a barrage of mail from investors that will typically offer a rock bottom price for a piece of real estate, for example. They want to flip it and so forth. So I think if we can get a couple of price opinion letters from realtors, engage a realtor to give us an idea of what it would cost or what it would sell for if it were listed today. Now I'm saying this assuming that the estate has no money to make improvements on the property. So it's going to be sold in an as-is condition. So, but I think we still need to get the best possible price we can for the property in its current and as-is condition.
And on that, I love dancing around. I'm so sorry, Nathan. I just want to reach back to you about creditors. Have you ever negotiated with creditors to pay for less, and what strategies would you offer about, you know, paying pennies on the dollar for debt?
You can certainly negotiate with creditors, and particularly credit card companies and collectors. They don't make a lot of money suing you. I often, however, will tell my client to do the initial negotiation, particularly if we've not yet sent the notices and they're getting, if they want to pay, I've made them understand that there's a possibility. One of the things I did not mention in the paper is that what we're seeing with credit card companies today is that they are filing 1099s with the IRS saying they have forgiven the debt, and that is taxable. So sometimes I'll have the client negotiate, and usually they can do a little better job if they're dealing with an individual. They know if these people had enough money to hire a lawyer, there must be some money somewhere. But yes, we have negotiated, and typically they will take less than the full amount, particularly if you can pay them relatively quickly.
Now, I've seen sometimes where these credit card companies or sometimes actually medical billing companies, they want a copy of the inventory. Would you ever advise your client to send the inventory?
It's a public record. It can be obtained at the courthouse. So yes, I will tell them to send that if that's something they require. But often what you get from these companies, and maybe this goes back to Cheryl's question, is you send out the permissive notice and you get a letter back from them. That is not a claim. It's just a letter. You've already told them what they have to do, and if they don't do it, burden's on them.
And so we get the money out. What are the steps now then to actually, write the checks to people? Jack, would you be able to kind of talk about these releases or these receipts that we want people to give us back as an administrator or representing the administrator?
Well, in a perfect world, you would have everything down to just cash, and you could write checks out of the estate account and have the heirs come to your office. You present them with a receipt and release that they sign, and then you give them a check, and then you can file those with your report of compliance, and everything's great. What I learned the hard way one time is I tried to withhold payment in exchange for a release, and I got told real quick by a much more experienced lawyer, you can't withhold money in exchange for that release. You can withhold it in exchange for the you can make them prove they receipted it, but not that they are releasing you. So you just have to do the best you can. Sometimes I've been reduced to filing copies of canceled checks with the court to show, because I never could get a receipt or a release out of the heir that lived in Nebraska or whatever. I could show that I sent them their money via certified mail, and I could show that they cashed their check. And, that's one of the easier ways to do it. And then don't forget, sometimes you're holding on to real property. So you got to draft those distribution deeds and file them in the county deed records, and send them copies of that and show the court that you did that as well.
And I'm gonna just open up. So real quick on a couple of items of administration. For those of you still are here, this is going to be recorded. We will have this available through the DAYL YouTube channel. The Dropbox folder will also be available. I recommend checking after 5 p.m. because we've got a lot of great materials available. We'll have some CLE articles that's been recommended by Judge Warren. We've got permission from the authors to be able to share the original copies as opposed to just the table of contents. We also have from the Dallas Bar Association, one of our exhibits, which is actually a timeline and of basically everything you need to do in an administration. It's pretty much a checklist. Now, if you haven't had already chance, and I'll add this to the Dropbox as well, you should really get a copy of the 2020 version of the Dallas Bar Association Probate Manual. It's available for purchase, or if you do some pro bono work, it's also for free, but it's an amazing resource, especially if you practice in Dallas County. And just a bunch of other materials. Again, we'll have that available by 5 p.m. So real quick, since we had a new question just popped up from Rebecca, if as an independent administrator, if unsecured creditors properly reply to our 120-day letter and we did not reject within 30 days, what is the limitation period and when does it commence? Well, this sounds like a question for Nathan.
If it's an independent and you don't reply within 30 days, the code deems that rejected. But again, in an independent, they have the full amount, full time, the statute of limitations that applies to whatever that claim is. If it's a contract claim, it's a 4-year statute of limitations at which to bring their lawsuit.
Oh.
Once again, the difference between independent and dependent.
Well, thank you so much, Nathan. And with that being said, let me turn this over quickly to our kind of our program chair, Judge Warren, as she talks a little bit more about what's coming up next.
Thank you very much, Jack, and thank you to all our panelists. I want to thank you all for this great presentation. I remember when I was practicing in probate law and I loved administrations, I struggled wondering, what do I do next? Because you can't find it in a book. It's not in a book. It's not
It's not something that's discussed frequently, and primarily because a lot of what you've heard you learn from doing and you learn from practitioners. And so I'd like to thank our panelists, and if you all could please give them a round of applause for me for their participation and their great advice and their insight that they've learned from doing this for several years, and also all the research and time that they put into this. Our moderator was exceptional. Please thank Jack Fan for all of his work, and thank you to the Dallas Bar Association, the probate section, especially in DYL, for their continued support in putting on these workshops and these programs. Coming up next, we have one more workshop for you, at least one more workshop topic. The workshops will take place over 3 days, so we're going to break it up so we don't take you or take all your time in one day. We are going to have our first presentation on the subject of guardianships. It's going to be on August the 14th, and it's going to start at 12 noon. We're going to talk about least restrictive alternatives. We're going to follow that up the following week on August the 18th, and we're going to talk about handling an emergency matter related to an alleged incapacitated person or crisis in the life of the incapacitated person. That is going to be for 1.5 hours. And then our last subject is going to take place on August the 25th, and this is also related to guardianships. And this topic there is guardianship and mental illness, understanding when a guardianship application will assist a person with a mental illness diagnosis. That's also 1.5 hours. Keep in mind, if you attend all of the guardianship workshops, it will qualify for the certification, the guardianship certification. So if you need, if you're up for renewal, this is a great time to make sure that you put it on your calendars. Thank you all very much for your participation, and also like to thank Judge Vasquez for participating. It was nice to have her here today. You all take care and have a good afternoon. Bye-bye.